trying to adjust them?
Rather than get in the hypothetical of what would happen if we had done this and conditions came in, I think you're right to highlight the real rate is our preferred measure. That is the rate minus inflation. That's the right way to think about how tight is the environment. And holding the rate at whatever, 5.5, 5.25 or something, as inflation goes down, is implicitly tightening because the real rate will be going up. It all depends. Nothing's off the table. Nothing's on the table automatically. It all depends on how's inflation going. And we're meeting every 6 weeks to try to stay up to date with that. And that's what makes the job difficult. I mean, that's why it's still going to be a time before ChatGPT replaces the FOMC. It's not always obvious. We're out talking to business people, talking to consumers on the ground, trying to get a real-time update that's not yet showed up in the data.
We could both get replaced out here, but I hope not, because we like the view. One last quick question, and that is about the balance sheet. You haven't really hit your targets until very recently, the monthly targets, just because of the maturity profile of what the Fed is holding. Do you think you need to speed it up?
Look, it's a fair question. We should be thinking about the balance sheet side separate from just the rates. It seems like a lot of the debate is about the rates. I feel like there should be a high bar to get off of the pre-planned approach to QT. Just as we learned in the run-up of QE, some forecastable certainty is worth a fair amount so you avoid taper tantrum type situations. I feel like on the downside, there could be conditions that we would want to change it, but overall, it's got to be a high bar to change it from what's expected.
Austin Goolsbee, thanks very much for joining us, the president of the Chicago Federal Reserve Bank. We'll send it back to you.
Mike McKee, thank you so much. Mike McKee out at Jackson Hole with Chicago Fed President Austin Goolsbee. While they were speaking, we got breaking news that Instacart has filed for an IPO. Let's bring in Katie Roof now, who joins us from Los Angeles with the details. And Katie, it looks like it has filed for an IPO as Maple Bear, and this would be under the ticker CART, C-A-R-T. What is Maple Bear?
Sounds like that's their official name, so if you're looking for filing an S1 on Edgar, I guess you need to type in Maple Bear. Good to know. But yeah, I mean, this is exciting. We've been talking about Instacart's news for IPO news for maybe 3 years. What feels like it's been one of those IPOs that have been anticipated, but it just never happened. And a lot of people were skeptical that it ever really would. And certainly it still hasn't happened just yet. But this is the closest they've ever been now that we're seeing their filing.
Well, another thing about this, it looks like they turned a net loss into a profit. Do you think that they're in the type of financial health that this era of IPO investors are going to want to bite on?
Well, it'll be interesting. I'll dig into the numbers shortly, but they have Nick Giovanni as their CFO. He used to run Goldman's TMT investment banking team. So if anyone should know how to do an IPO, it would be him. So he's obviously been paying close attention to the market and what they're looking for. But yeah, as you mentioned, people are definitely a lot more focused on profitability than they used to. And so, Instacart's really going to have to prove to investors that this is something that can remain cash flow positive and will be generating income for the years to come.
Fantastic. Katie, thank you so much for giving us the latest here on Instacart. And we should mention as well that PepsiCo has agreed to buy $175 million of Series A preferred stock, and that Cornerstone investors have indications of interest for about $400 million at the IPO. We'll get you more details as they continue to trickle through and we look through the prospectus. But we want to go back to the macroeconomy here and bring in Jason Furman. He is Harvard University Professor of Economic Policy, former chair of the Council of Economic Advisors under President Obama in the wake of the great financial crisis. Jason, it is always good to see you. Thank you so much for speaking with us today.
Great to be here.
So give us your first take on Jay Powell's speech today. I mean, there are two main questions for investors heading into his comments. How high will interest rates go and how long will they stay there? Did he go in any way towards answering that for you?
He went a little bit of the way towards answering that, but he couldn't give a definitive answer because he doesn't know the answer right now. He's going to need to see the data. But I was glad to hear, first of all, no premature celebrations on inflation. He was very clear. We've had 2 really good months of data, but you never know if that lasts. And also that policy would remain asymmetric, that he'd be very reluctant to cut rates, but he might be raising them even further.
So one thing that you've noted, Jason, in op-eds that you've written and comments that you've made is that we've had a lot of good luck on the economy lately. Could you give us some examples of what you mean by good luck on the economy?
Yeah, I mean, the biggest piece of good luck we've had is the tremendous fall in the price of energy over the last year. Some of that is things like the weakness in the Chinese economy, which does reduce pressure on global commodities prices. And that's part of why we're doing so well on inflation. That's just not something I'd count on going forward. In fact, we're already starting to see maybe some hints of increases in the price of oil.
Speaking of increases, what else could create further inflation shocks, as well as maybe, that R-star debate really increase the level that we're dealing with for a longer period of time?
Look, there's sort of bottom-up approach to thinking at the economy and a top-down. From a top-down, the biggest concern for inflation is that wages are growing about 2 percentage points faster than they were prior to COVID. Chair Powell noted that there's been some slowdown in that wage growth, but it's still way above what you would think you'd have with 2% inflation. It's more like what you'd have with 4% inflation. So just tight labor markets, high wage growth, that coming back through to prices. From a bottom-up perspective, I think healthcare and the health sector is the area that's most at risk of some increase in price growth, which would matter a lot for some of the metrics the Fed is very focused on.
Now, the other thing that you really heard our own Mike McKee really push Austin Goolsbee on is this idea of a wage price spiral. Is this something that you still have concerns about?
Look, I like to use the word wage price persistence. Spiral sounds to people like you go from 4 to 5 to 10 to 100 to 1 million. Of course, that's not what's happening. But what is happening is that wage growth continues to be way above normal. Price growth continues to be way above normal, and each one of those is feeding the other and continuing the other. So yes, I worry that inflation is getting embedded in both wages and prices in a way that will make it last. Not in a way that'll make it explode, but in a way that'll make it hard to get it down to 2%.
So that invites the question, Jason, which is, and it's a debate, obviously, whether the Fed should change its inflation target. 2% is what it has identified as the target, and it's been very consistent saying that's where we're going to. But at some point, is there reason to believe that as we enter another period for the economy, a new normal, a new structural stage for the economy, that 2% may not be appropriate anymore?
Look, I don't think the Fed should be talking about changing the target right now. They should be talking, just like Jay Powell did today, about what they're going to do to bring inflation down. It's still too high. In 2025, though, they've committed to reviewing their targets, their framework, all of that. I would love to see them shift to a range of 2 to 3% inflation. They have to make it really clear that they're very hawkish about it. They're very serious about it. They have to keep their credibility. But if they can get inflation under control, yeah, I think a higher target would give us more room to manage the economy. But for now, they should be focused on getting inflation down.
At this point, you still have the market pricing in cuts next year. We just have less than a minute here. Do you think that the market is still right to expect them?
Look, there's always a chance you go into recession, in which case maybe they cut rates by 200, 300 basis points. The most they're going to raise rates is probably 50, 75, 100 basis points. And so there's a real asymmetry there that I think is being priced into the market. So modal outcome, the Fed doesn't cut rates for a while, but the mean is definitely skewed towards the downside for rates.
Very, very clear read here of the economy. Jason, really appreciate your joining us. Jason Furman is Harvard University Professor of Economic Policy. He is the former chair of the Council of Economic Advisors under President Obama. We are, of course, just getting started here on Bloomberg Markets at Close. We've got more high-level conversations on the economy with a great lineup still ahead. Cleveland Fed President Loretta Mester will be joining us live from Jackson Hole.
Plus, we're also going to focus on what's next for the European Central Bank. Martin Kazaks, a voting member of the ECB, is going to join us.
And that's all a prelude to our exclusive conversation with ECB President Christine Lagarde shortly after her remarks in the next hour at Jackson Hole. You'll want to join us at 4 p.m. Eastern Time when Tom Keene sits down with Madame Lagarde. This is Bloomberg.
large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, of the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
All right, this is the countdown to the close. I'm Scarlett Fu here with Sonali Basak, and we have some headlines here out of Spain, Sonali, which caught my attention. The Spanish Women's Soccer Players Union now are refusing to play, and they say the player who was kissed by the head of Spain's soccer federation, they say that Jennifer Hermoso says the kiss was non-consensual. And of course, there was a lot of pressure for Luis Rubiales to step down, and that has not happened. He has defended himself, saying it was consensual. Now there's the response here from the Spanish Women's Soccer Players Union.
There certainly is, and remember, this is an incident that happened last Sunday, and so this has been going on now for a while in terms of the saga between the players and
yeah, I just don't see how an open-mouth kiss, you know, after this big event would be consensual. At what point did he get her consent? It's not clear. All right, in any case, we're looking at the markets here with equities higher on this Friday. This is Bloomberg.
We can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Good morning, good morning.
This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets. China open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back to Jackson Hole, Wyoming. I'm Michael McKee, the economics and policy correspondent for Bloomberg. And we are here with Loretta Mester, the president of the Cleveland Federal Reserve Bank, as the Kansas City Fed's Economic Symposium continues. Of course, the big news this morning, Loretta, thank you for joining us, is Jay Powell's speech. Yes. The world was watching, but he didn't seem to say anything new.
No, but I thought he gave a very articulate explanation of kind of what policy going forward is going to be looking at, right? Inflation is still too high. You know, we've had monetary policy actions that brought us into restrictive territory in terms of that. And now it's just a question of, you know, calibrating that to make sure that we're on a sustainable and timely downward path to 2%. So the commitment is there to bring inflation back down to 2%. And I thought he did a very good job of explaining sort of the risk management that we're going to all be undertaking in this next phase of policy.
Well, you've been on record as suggesting that you haven't calibrated enough, that you probably need a little bit more restraint on the credit markets.
Yeah, I mean, we're going to get more data in before September, of course, but when you think about sort of what has changed between June and now, we have a bit stronger growth than a lot of us had thought. We have gotten inflation down, but as the chair said, 2 months data is not enough to be convinced that it's coming down. And then we have higher long-term rates, which is going to put some downward pressure on inflation. That said, you know, in my view, you know, I think that really under-tightening would be a worse mistake than over-tightening a little bit, because we can course correct that. Under-tightening means that inflation could remain higher for longer than 2% for a little bit longer, and I don't think that's something I would want to entertain. The way I think about it is I look at sort of what our time path for getting inflation back to 2%. I wouldn't want to see that pushed out well beyond 2025, which is kind of in the cards now in terms of the forecast. So I'm going to be very cognizant of that when I put in my new forecast for the next meeting.
So if you're confident that you could course correct if you over-tighten, does that suggest that you think the idea of a hard landing is at this point kind of off the table and the soft landing is the base case?
Well, I have a base case of a soft landing in my own projections. And, you know, of course, we're always navigating the economy going forward. So you can't take anything off the table. But if you think about how resilient growth has been, I think it's been higher than many of us had forecast. I do think we're going to have to continue to moderate demand. We need to see that moderation in demand to bring demand and supply into better balance. We also have had some positive things going on the supply side. We have labor force participation that's moved up. If you look at sort of those prime ages, that participation rate is now above what it was pre-pandemic. So that's a good thing. Supply is adjusting. And, you know, we have the supply chain disruptions being more normalized. There's still some constraints there, but again, those are improving. So we have both things happening at the same time. So that gives me more credence to the view that, you know, a soft landing may be what we're after. But we're going to have to keep monitoring the economy.
The chairman also said today that growth has been faster than you expected. Do you expect a significant markup in growth estimates at the next summary of economic projections at the next Fed meeting?
Yeah, so I can't predict what my colleagues are going to do. I'm going to probably have to mark up my own projection to be a little bit stronger than I had in the June projections. And then that's going to feed into what I think the appropriate policy path will be.
Do you change your unemployment forecast, given the fact that unemployment is not doing what you've all predicted it would do?
Well, we have seen moderation in the labor market, and we kind of need to see that moderation in the labor market just as we need to see it on the product side, and we are starting to see that. And so that's not a bad thing. The labor market continues to be very strong. But again, we have to be focused on making sure that we're bringing demand in both product and labor markets into better balance with supply, and that'll be the way to get inflation down.
The labor market has, as you say, loosened, and we've seen wages, the wage growth start to slow down. But has that come down enough, or do you still want to put some downward pressure?
Well, I think a wage growth is an indicator of where we are in inflation growth. So we don't aim to bring wage growth down, but it's still going up at a pace it's stronger than what we would need to see for 2% inflation. And I think that's part of what's going to happen. We will probably see wage growth moderate somewhat, but we don't really target that. We really target the inflation rate.
Now, you've got UAW pattern bargaining starting, well, it's basically started, and today the UAW took its official strike authorization vote. You have a big automobile industry component of your district. Are you worried about what comes out of that?
Well, it's just a part of what's happening in the labor market. So we look at all the data that comes in, and certainly that's going to be a factor that we think about in terms of what is it telling us about wage growth going forward? What is it telling us about the strength of the labor market going forward? So that's the context in which I look at it. We don't, in the Fed, sort of look at individual industries and sort of that bargaining decisions. That's for them to decide, and then we use that as data. What's the environment look like?
I just wonder, though, the automobile industry is so big, not just the big three auto companies, but then you've got all the suppliers, and the wage demand sort of trickled down. So then does that lead to trickle up inflation?
Well, I think what we have to look at, we don't see any evidence that there's a wage price spiral. I mean, I know that was earlier, people were concerned about that. That's not what we're seeing now. We are seeing the labor market moderate and wages moderate. We just need to see that continue to be really confident that inflation is on this timely and sustainable path back to 2%. And we're committed to staying the course and making sure that inflation returns to 2%.
Now, we know that inflation, at least according to all the experts, is going to pop back up a little bit, just sort of mechanically. How far would it go before you started to get worried?
Well, you know, we have to get inflation back down to 2%. You're right. There's base effects in some of the numbers. And, you know, that's why I think the way I interpreted what Chair Powell said today is really to indicate to people that, you know, one or two great readings on inflation aren't really enough. We need to see sort of sustained improvement. And with core inflation, which is what you take out the food and energy prices and you take them out because they tend to be volatile, that's still above 4%, and we really need to see that come down. And so we're going to stay the course in terms of our monetary policy, making sure that we are restricted enough so that inflation comes back down. And then we'll also be evaluating how long to stay restricted. As inflation comes down, the real interest rate, or in other words, nominal rates adjusted for inflation, that'll actually be, you know, tightening. So we're going to be having to watch that as we go forward in this, you know, coming months and, you know, over the next period.
We went from monthly inflation rates of 0.6 to 0.5 to 4. We're now at 0.2. How much higher would it have to go on a monthly basis before you thought this is not just base effects, this is something we have to be more proactive in?
Well, it depends on, yeah, I mean, you're right. The point estimates are very important to look at. I mean, year over year, you know, changes are kind of a good guide. So we look at the monthly numbers because that tells you about turning points and other things. But we also have to look at to make sure that inflation is coming down on that year over year basis because, you know, we're targeting year over year inflation of 2%. So that's kind of what we look at. And those monthly indicators give us a good view about whether things are moving back up. And then we look at the components. And as Chair Powell had in his speech today, he went through sort of the components that we're watching in terms of rent inflation, which then feeds into house price inflation, and that service sector, that all-important service sector.
Markets have raised yields in recent weeks significantly. Is that something that is helping you? And would you worry if they started to go back down again and conditions got looser? Are they where they should be in terms of the policy that you want?
Well, certainly the higher long-term interest rates put downward pressure on inflation, right? So when we think about financial conditions, they feed into the financial conditions. So that means that we have to think about that when we think about calibrating our policy rate. I think one of the concerns that people have expressed about the higher long-term rates is maybe that's going to have a financial financial stability or banking industry effect, adverse effect. And frankly, in talking to the banks in our district, we see them already taking actions to make sure they have adequate liquidity. You know, they're taking more caution in terms of their lending capacity. They're tightening credit conditions, and that's exactly the mechanism through which tighter monetary policy then feeds through to the broader economy. So I'm not concerned about the higher interest rates. The market is determining that that's where they should be, but it's certainly a factor when we look into terms to calibrate our policy in order to hit our inflation goal of 2%.
Going forward, and this is all about structural changes to the economy, this conference, where do you see the U.S. economy coming out of the pandemic distortions? Do we go back to a pre-pandemic era of low interest rates but low inflation and low growth rates? Or do we go back to a higher inflation, higher interest rate environment?
Well, I think right now, you know, that's a little bit in the future. We don't have to think about that necessarily. But I do think there are arguments on both sides. I think a lot of people say we just haven't had enough data yet to determine where our star is, that, you know, long run interest rate, neutral interest rate. And other conditions say that, well, if we have less globalization, if we have the Chinese, you know, economy pulling back, that may mean put upward pressure on inflation. And so I don't think we know yet where we're going to settle, but we do know that we're committed to getting inflation back down to 2%, and we're going to calibrate our policy. And when we say we're data dependent, we mean we're taking into account all the data, including the data that we get, that anecdotal information that we get from our district contacts, which really is forward looking. So again, I don't think we can make a determination of where things will settle down yet, but in this period, we know that there's still COVID pandemic effects affecting the economy, and we'll just have to wait and see. We also have AI, you know, new AI coming in. And in fact, the last session was all about sort of productivity growth and what that's going to be for the economy going forward. So I think there's a lot of uncertainty around those things, but for the case in point now, we just need to be focused on bringing inflation down.
One of the issues with where you end up coming out of it, and I realize it's in the future, but the housing market is basically frozen now because interest rates, mortgage rates are very high, and so many people are locked into very low mortgage loans that they don't want to move. Are you going to get to a point where that unfreezes, or are we going to be waiting a generation, essentially, to turn over housing and get the housing market going again?
No, I mean, look, we're at a very restrictive stance on policy. We had to do this because of where inflation was. You know, my expectation is when we are convinced that inflation is moving down sustainably to 2%, back to 2%, we'll be able to move policy into a less, you know, restrictive stance. And as we do that, we're going to see mortgage rates come down. So again, right, there's dynamics going on here because we're still in a high inflation environment. But over time, right, we're going to be able to normalize our policy, and therefore we're going to see other interest rates come back down.
Loretta Mester, thank you very much for joining us. Cleveland Fed Bank President. We'll send it back to you.
Our thanks to Bloomberg's Michael McKee with Cleveland Fed President Loretta Mester. We're taking a look at the markets right now, and it's interesting. You are still having a little rise in the dollar. You are also having a little bit of a rise in crude oil as well. You also are having a rise in the key indices today, aren't we?
Yeah, the major indexes are right around session highs, and looking at the sector performances, it's up across the board. 11 sector groups, all in the red, all in the green, nothing in the red. When you splice it into 24 groups, the only laggards here are chip makers, and that's all NVIDIA because of NVIDIA's blockbuster earnings this week.
I'm so glad about how much I learned about GPUs and CPUs this week. I think that knowledge will last me through the end of the year. But listen, the stock's finally getting some relief. The interesting thing about the rise we're seeing in the S&P today is that we're finally seeing a week of gains in a month where every week has been down. And in fact, it's going to be the worst month we've had since February.
Yeah, so potentially ending 3 straight weeks of losses as we end the week here on a bit of a high note. We'll see if it holds up as we head towards the close.
For sure. Still ahead. We're going to go back to Jackson Hole for an interview with Bank of Latvia Governor and ECB voting member Martin Kazaks. This is Bloomberg.
crucially important. And I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
It's Friday afternoon, but plenty of breaking news because Hostess Brands shares are spiking in late trading right now, up about 20% after Reuters reported that it is exploring a sale. You have Mondelez among the brands that are interested in Hostess, along with Pepsi, Hershey, and General Mills. So we're seeing volume jump to 5 times the 20-day average, and there is that spike once again as it builds on the advance, up now 22%, Shonali.
Up 22%, and Reuters is reporting a whole host of interested potential acquirers: Pepsi, Hershey, General Mills, Mondelez International, and that's part of why you're probably seeing that spike in the stock. You are seeing a potentially competitive situation. They're reportedly working with Morgan Stanley, which is also good news for the bank after missing out on two big IPOs, Arm and Instacart.
Always keeping track of those bank deals. All right, let's get back to Jackson Hole right now, where Bloomberg's Michael McKee is standing by with Martins Kazaks. He is the Bank of Latvia governor and, Mike, a voting member of the European Central Bank.
Yes, indeed. Thank you very much. And we are talking to somebody who has an influential voice in Europe. We're about to hear from sort of the boss, Christine Lagarde. What do you think, before she speaks, what do you think of where the European economy is and what it needs right now?
The picture is quite mixed. If you take a look at the PMIs, then the economy is somewhat weaker than expected. Labor market, however, still remains strong. If you take a look at inflation, headline inflation has been coming down, which is good, of course. But core inflation is still quite elevated without a very clear downward trend. So at the current moment, I would still be no rush to say that we are done.
Well, not necessarily done, but do you pause?
I would say that pausing does not mean stopping and not ever raising again. We need to see the data. We need to see the new forecast, which we will have in September, and then we will decide. But I think it's very important to take into account this kind of last mile element. And currently, I still think that, of course, the risks are now really on both sides, doing too little or doing too much. But I would still err on the side of raising the rates, given the current standing, what we see about the economy, because we can always cut. If, however, we stop too early, then, of course, later on, it may require much larger interventions.
Well, do you feel confident that if you raise rates, you're not then risking growth and risking recession? And I guess the parallel question to that is the difference with the ECB and the Fed is the Fed's got one country. You've got a whole bunch, 19 countries, which have different economic situations now.
Of course, but we still do have one single monetary policy. So we have to look at something which is kind of an average, weighted average. But we very clearly have gone a long way, and most of the rate increases by far have been done, and further rate increases from today's standpoint are still going to be, if they are going to be relatively small. And if there is going to be damage to the economy, of course, we will do very much data-dependent decisions, and if necessary, one can always retreat. Okay. But I would still think that stopping too early is a bigger problem rather than kind of being forced to cut sometimes if the economy really turns out to be somewhat weaker.
Do you think that there are still long lags, still effects from the policy tightening you've done that are yet to hit the economy?
Yes, it's still in the system, and that's one of the issues why it has to be data dependent. One has to take it step by step when we see how those lags work through the economy, and that's why I wouldn't rush anything. So let's look at the data, let's see what happens, and let's return inflation to the 2% target sooner than the end of the 25, which is currently the end of the forecast horizon.
Well, how long do you hold rates at their peak level, whether it's here or you raise it a little bit?
As long as necessary. The rates, in my view, are already in the restrictive territory. We may need to take a few more kind of decisions if necessary, but we just hold on to the rates when we see that inflation really comes back down to the 2%. And I would very much look forward to what happens with the core inflation. If the core inflation does not come down consistently, then of course there is a risk that headline pulls up back, and you don't want to have that.
Well, if you keep rates higher for longer, as inflation comes down, real rates rise. Yeah. Is that going to be an issue?
Of course, it will affect the economy, and given that we will take step-by-step approach, given what the data says, I think we are well covered for that. But I think that one should not think of very sharp rate decreases when it happens in the future. I think that would be relatively cautious, step by step, at least for two elements. One is it's quite likely that neutral rates are higher than they used to be, at least in the medium term. And point two is we would need that policy space to counteract other negative shocks. So I would not see it necessary to give up the policy space that quickly. So the decreases most likely are going to be relatively slower than we saw kind of the rate rises in the last year.
What would you like to see to be looking at that kind of decision? Do you need to get really close to 2%, or do you need to be below 3% and sort of on a month-by-month basis making progress?
Of course, it's going to be very much the current data, but also the current outlook at the time. And I would see that we would really need to cut the rates when the inflation outlook starts to consistently undershoot our 2% target. If we converge to 2%, then why should we rush with the rate decreases?
Some members of the committee have suggested you're facing sort of a stagflation situation where inflation is coming down but higher than it should be, but growth has stalled. Do you see that as a danger?
I think you don't want to get stuck there. At least I wouldn't want to get stuck in a situation when rates are not high enough to push inflation down. So the policy choice is quite clear. Our mandate is 2% inflation, and if we are not at 2%, we would need to maintain stricter financial conditions than at the time.
Would you, since you did say that the neutral rate is probably higher, where do you see maybe rates settling out once this is behind us?
I wouldn't speculate about that at the moment.
Oh, really?
We'll see.
Come on, everybody would love it.
We'll see. We'll see when the time comes. I think step by step is an important approach here.
What is happening with the labor market in terms of wages? I know in Germany, we've seen a lot of pattern bargaining that pushes wages up. Does that spread to other countries, and are you seeing wage growth that's still at an unsustainable level?
Wage growth. The labor market is still relatively strong, so that is one of the key reasons still to be quite concerned about the core inflation and the link from labor market to inflation. So that's why I said no need to rush with the monetary policy decisions saying that, well, we've done what was necessary. In my view, not yet.
Can't let you go without asking about the elephant on the continent, and that is the war that's underway. You're getting ready for another winter. Energy prices always a concern. What kind of effects is the war having right now, and are you worried that things will get worse economically because it continues maybe into the winter?
Links with Russia itself are very minute, if any. But of course, the largest exposure is with respect to the energy sector. But European economy has done quite well. We've stockpiled quite nicely. But of course, all those negative shocks are the risk elements. And that is one of the reasons also one has to be cautious. But I would be very happy perhaps to say that the worst is behind us and we've dealt with this much better than one would have expected a year ago.
Thank you very much for joining us, Martin Kazaks. He's the head of the Latvian Central Bank. We're going to send it back to you in New York.
Thank you so much. Bloomberg's Michael McKee out in Jackson Hole, and of course we'll be checking in with him later on as well. Coming up in 1 hour's time, Tom Keene will be speaking in an exclusive interview with European Central Bank President Christine Lagarde. That will be live from Jackson Hole. And one thing, Shonali, that Mike and Martin Kazaks talked about were the negative shocks, the risk elements. They mentioned the war in Ukraine, but China is also very much part of that story.
It certainly is. A lot of concerns about what the economy is looking like that and the read-through to other economies and the relative strength. Something I'm looking for later in the conversation with Lagarde, too, is how hawkish she does or does not get. Earlier today, you did see a weakening in the euro that has kind of come back, and it's been holding against the dollar at about 108 pretty much all week. So can she say something that moves the needle here moving into next week?
It'll be a tall order, given that it'll be Friday, late Friday, and of course, Europe has gone to bed by that point, but they won't because Madame Lagarde will be speaking. So as we head towards the close, we've got an hour to go or so. It's a mixed read when it comes to the bond market. The 2-year yield moving higher, approaching 5.05%. The 10-year pretty much steady at 4.23%. And equities for the moment, Shonali, are ending the week on a high note.
High note, barely 0.3%, pretty much for the full week here. But green on the screen is a big relief for a market that has seen 3 full weeks of declines.
All right, we'll see if we can snap those 3 weeks of losses. From New York and from Jackson Hole, this is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everyone. Happy Friday. We made it, August 25th. I think Kaylee and Joe had it right, man. I thought August were supposed to be quiet, but man, not even close. And that is the voice of Jess Metten joining us on this Friday. She's in for Tim Stenivek, my co-host, who is off today. I mean, front and center, though, Jess, no doubt about it. I know you watch the markets. You were glued to your desk during that brief, but not as brief as last year's speech from Fed Chair Jay Powell.
And that's all everyone could talk about, right? Leading into this on Friday and hearing from the man himself, Fed Chair Jerome Powell, which is interesting. We've heard from him still reiterating how the Fed is going to continue to potentially even raise rates further than here, but he did leave the door open, right, when you're thinking about proceeding carefully.
Listen, he said basically the job isn't done yet.
Right.
So we're going to get into that. And we've got, it looks like stocks on track for slight gains this week.
So actually snapping 3 consecutive weeks of losses for the S&P and the NASDAQ 100, Karen.
So go figure with all this stuff going on and all these kind of questions up in the air. With all of this in mind, we are going to, though, go back to Jackson Hole and talk about Powell's longer yet still brief speech and what you need to know. And as just said to a clue, higher rates if needed. I mean, he's been pretty clear about that. Also from Jackson Hole, Bloomberg's Tom Keene sitting down live about an hour from now to talk with ECB President Christine Lagarde. And then speaking of the rate environment, Jess, the Bloomberg Big Take today, it's also in Business Week magazine, how investors see a high-spending new normal, keeping interest rates and inflation elevated. It has to do with U.S. government debt, fiscal debt.
Another thing we're going to be coming up on later in the program, speaking with the co-founder and CEO of BitGo, arguing for a regulated environment to safely store digital funds. And then also, the Betterment CEO will also be speaking with us on the business of financial wellness.
I kind of wonder if crypto is part of that financial wellness.
I think it is.
Good point, good point. We're also going to tell you about the professional network that's benefiting from upheavals elsewhere in the social media landscape. This is something we have all been talking a lot about, how we are increasingly spending more time on one social media platform. It's one that's very well known for professionals, so we're going to get into that. And then what's Matt Miller driving?
I can't wait.
It's not as expensive as the vehicle he briefly talked to us about yesterday, but nonetheless, maybe it's something that you just might want to put on your buying list. All right, folks, we're going to talk about the markets. We do have stocks pretty much at their best levels of the session. Tech stocks definitely outperforming. We did see some move up in yields, but we backed off. But let's head over to our TV colleagues because Countdown to the Close, it starts right now.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. Scarlett Fuish and Ali Bassick here, joined by our colleagues Carol Masser and Jess Metten. And of course, we welcome everyone across the Bloomberg platforms, television, radio, YouTube, and streaming on Originals. Carol, where were you when Jay Powell was speaking?
I was actually at a doctor's office and listening to the speech, and I said, excuse me, you've just got to hold for a second because I got to hear this. That's exactly where I was. And what's interesting, we just had a headline crossing, right, that Christine Lagarde saying that the ECB to set rates as high as necessary for inflation. This is exactly what we got from Jay Powell, right? Nothing new, basically saying that if we've got to do it, we are. And I thought what was so key, and I don't know if you guys caught this, Mohammed El-Arian talked about it very much near the end of the speech. He said, as is often the case, we are navigating by the stars under cloudy skies, which was kind of like, woo, a little bit. But his
That's good imagery.
Right, exactly. Who knew? Maybe he's a little bit of an astrologer. But what's interesting is, it's the point, Jess, I feel like, that issues maybe beyond the Fed's control because there are a lot of global issues going on.
There definitely are. And this is the halfway mark between the Fed's last meeting and then the next decision on September 20th. So even before that decision, as we get closer to heading into September, which we all know is historically the worst time of the month when it comes to the stock market. But we'll have to see how that plays out going into it. But we still have the jobs data next Friday. We have the PCE, the Fed's preferred gauge, next Thursday. And then we still have a CPI report on the 13th ahead of that decision.
It's funny because whenever you say storm and stars and sky, all I can think about stars is our star and this idea of the neutral rate. And you really have heard our own Mike McKee really push everyone he's speaking to about this idea that some of the rate hikes that we're seeing could lead to more perennial height in terms of interest rates.
It's a big question mark, and it's something I suspect we won't really know until after the fact when you can look in the rearview mirror. But one thing that is striking to me is the equity markets and how they've performed this week, because we had two big catalysts, right? You had NVIDIA's earnings and you had Jay Powell's speech. And the stock market's buoyancy, of course, has forced a lot of bears to get off their perch, Mike Wilson of Morgan Stanley among them, but he's still very much a bear, Sonali.
Yeah, what's fascinating to me about this is when he made his mea culpa earlier this year, he did not really abandon his price target. So was it really a mea culpa? I think when you hear him now say that the rally is over, it kind of really reconfirms his view that things were not as rosy for the rest of the year as you would think they would be for the first half.
This is what happens when you've been really, really right in a big way, and then all of a sudden you start putting out a lot of stuff, and then we kind of parse everything you say. All I would say is markets go up, markets go down. And when markets get overvalued, it is normal, it is good to see a little bit of a breather, whether it's an NVIDIA, which is up more than 200% this year, whether it's the NASDAQ 100, which has been on a tear. I mean, things need to kind of get some of that inflated values, some would say, sometimes out of it.
And even after yesterday's big decline, the S&P 500 and the NASDAQ 100 are both on pace for their first up week in August. But looking at where the average price target is, when you're looking at Wall Street consensus here, around 43.18. People were coming into this year thinking the S&P 500 was going to end around 4,000, but that's still trading below where the S&P 500 currently is right now.
Yeah, well, I mean, as we've learned, NVIDIA can lift a lot of boats, at least for a while, but when it comes down to it, for now, it can lift only its own boat, right? Because all the other chip makers, Sonali was just talking about Marvell, it's a bit of a reality check, these results.
Did you guys see that Goldman Sachs came out and he says, they put out some research, sees long-term AI trade reaching far beyond NVIDIA. And they basically say you've got to have a long-term perspective because it's going to make potentially workers and just a lot of things we do more productive in the long run. So I think it's kind of like, give it some time, perhaps.
Probably not in the next year, but yeah, in time.
But there are a host of investors that would see this pullback as a buying opportunity for what it's worth, right?
Exactly, exactly. All right, guys, that's a wrap. We're going to come back in less than an hour's time. We're going to hear from Christine Lagarde sitting down with Tom Keene, and then we are going to wrap up the trading day and the trading week. What a week it's been. Join us at 4 p.m. Wall Street time on radio, TV, YouTube, and Bloomberg Originals. Beyond the Bell. Join us then.
He is.
Cowboy hat and all.
Love it.
I do too, but just interview after interview, really trying to get to the heart of what's going on in the economy and what it means for U.S. monetary policy. He has spoken with several members of the Fed and Fed central banks, if you will, or Fed regional banks, I should say, in today alone. So let's get right to him, because Bloomberg News international economics and policy correspondent Michael McKee, sans hat, what happened there at the Jackson Hole Economic Policy Symposium. Mike, good to have you here. I am in awe. I usually am anyway, but man, you've just been having one conversation after another. But let's start with Jay Powell. What sounded very familiar to you? What sounded that like maybe it's some new news?
I didn't think anything really sounded new. What he did was sort of restructure it, what he has said before, in an effort to sort of give it a hawkish tilt. It's sort of a message to the bond market: don't get carried away. We still have more work to do, and we're going to do it. And if we needed to raise rates again, and if we needed to risk a recession, we would do that. But right now, it doesn't look like that. Things look pretty good.
Was there anything he didn't say or leave out that you think is notable?
No, but what I did think was interesting was when he said that we don't know what the neutral rate is, and he said we are going to keep 2% as our target. That's not going to change. Those are two of the things that had been talked about on Wall Street, global Wall Street really, as things that he might talk about or that the Fed might change, and he was at pains to basically say, I heard you and you're wrong. And those were direct messages to people who think that the Fed might be adjusting its policy.
So, no, 2% is it, and we're going to get there. That's basically his point.
That's basically his point, and they're going to keep the pressure on. Now, what does that mean? Does it mean they have to raise rates again? They don't know. but he said they're prepared to if necessary. It could also just mean that they keep rates where they are for a very long time into 2024 in order to ensure they're getting back down to 2%.
Mike, what I wonder is, at an event like this, where there is obviously Jay Powell, and he's one of the stars, if you will, for lack of a better word. You've got Christine Lagarde, another one. And then, of course, you've got, the Fed presidents that you've been speaking to and others. What are the kind of conversations that they have that you are aware of? Like, what is it that they are trying to learn from one another in an environment like today?
Well, there's a lot of discussion about the unusual situation we find ourselves in the global economy. The idea that we are seeing inflation that went so high, so fast because of supply disruptions. Now those supply disruptions are starting to normalize, but we are still seeing elevated inflation and no impact on unemployment. Labor markets are strong everywhere. I've been talking to a lot of the European central bankers, and that's one of the first things they say is labor markets remain very tight. And that's not how it's supposed to work when central banks raise interest rates that high. So there's a lot of talk about what's going on in labor markets and why we're seeing what we're seeing. There's a kind of a general feeling that the pandemic reset expectations for workers. Some of them retired more early than they otherwise would. Some don't have the social safety net to enable them to get back to work, which means there are openings out there still. And that gives them hope that we're going to still see strong labor markets, but we're going to see, and that'll mean strong growth, but we're not going to see it be inflationary.
There's been so much chatter, too, about the debate within the Federal Reserve about where do we go from here. Based on your conversations with Federal Reserve officials, how divergent do their opinions seem to you?
Well, I have to say that after Powell's speech, nobody changed their minds. We did speak with Patrick Harker, who thinks that things should be on hold, and Loretta Mester, who thinks that they should have to raise rates again. Basically, it's a question of tactics. Do you raise rates a little bit more, or do you just sit and wait and see what the impact of the lagged effects of what you've already done is? And that's what the debate is for them. But even those like Mester, who think that probably another rate increase is justified, she said she's willing to change her mind if the data come in and show that inflation is still going down. And they have these two inflation reports before we get to the next Fed meeting.
Hey, Mike, it was hard to pick a soundbite from all the interviews, incredible interviews you're doing, but we did do just that. Here's just a little snippet of Mike's conversation with Philadelphia Fed President Pat Harker, who definitely had a point of view when it comes to monetary policy.
At this point, we really need to see inflation moving down. And we're seeing early signs of that, but I want to keep rates where they are right now, and then we'll decide later what we do.
All right, so that's Pat Harker, obviously president of the Philadelphia Fed. So he wants to keep rates here. It's interesting. Mike, how do you think about last year, the conversations, the themes, the trends versus this year?
It's kind of interesting because I've talked to a couple of central bankers who said the same thing. We're in a difficult situation for them because last year they could come here and say, we're going to raise rates, no question about it. Markets don't price in any kind of easing. We've got a long way to go with inflation. Now you've got this ambiguous situation. Do we have to raise rates more, or do we just sit where we are? And the economy is giving us mixed messages on that. So there is a big change in tone and emphasis here from last year, but there's also been a big change in the data. Inflation's come way down, unemployment hasn't moved, and growth, as the chairman said, is stronger than expected.
You mentioned, how much inflation has come down in the past year. What about in Jackson Hole? Are things expensive? Are they cheaper than last year? What are you noticing?
They are more expensive than last year. Somebody noticed that the Pioneer Grill, Tom Keen's favorite stop here, has raised its prices somewhat. Jackson is also kind of a more expensive place. It's become very much a tourist destination in the summer, so you do see that impact. But I think you're seeing here what you have seen everywhere. Prices went up. Now the question is, do they keep going up, or have they recouped costs and now they can keep things steady? I guess we'll just have to come back next year and find out.
Managers, are you listening?
And we do have, obviously, a batch of inflation coming up, as you know, with the PCE next week. We have CPI on the 13th. But what do you think is that enough, depending on what that data tells us, to make a divergent decision once we get that rate decision on September 20th?
Well, if we get what we're expecting, it probably means the Fed pauses again, and those who think we need higher rates are probably willing to go along with that. They'll put their sights on November. We should see a slight rise in the CPI and the PCE because of base effects and energy prices going up. The interesting thing to look at is going to be the core PCE ex housing, the Jay Powell indicator, which he talked about today as still being too high. So do we see further progress in that coming down, or does that level out, or does that actually go up? That would be maybe a warning signal for November, but I think if we see very little change, even if it's up a little bit, we're not going to see much happen in the September meeting.
Hey, Mike, was it a little funky when, in conclusion, in Jay Powell's prepared remarks, he said, as is often the case, we are navigating by the stars under cloudy skies. It just felt like a little woo-woo to me. Mohammed El-Arian on Bloomberg TV kind of brought that out, but it was kind of pointing out there's a lot of things going on globally that are beyond our control.
Yeah, this is one of those things like the Grateful Dead, if you have been a fan for a long time.
Like Jay Powell?
Yes.
That line came from his 2018 speech here at Jackson Hole, his first speech here as chairman, when he talked about the various star measures, R star and U star, and he was making the point at that time that since we really don't have a way of knowing what those numbers are, it's kind of hard to set your policy by an R star. And so he's referring back to the same thing he said some time ago, 6 years ago now, I think. And for those of us who've been here for a long time, it was kind of funny.
All right. Hey, also kind of funny, I'm going through my social media on Twitter, X, whatever you want to call it. You chatting with the Fed chair, hat and all. Did he like the hat? We have it up. We're putting it up on everybody on YouTube and Bloomberg Originals. Did he like the hat?
He liked the hat, and I offered him the hat for his speech today because I told him people were worried that if I'm wearing the hat on TV, they're looking at the hat instead of listening to what I'm saying. And I said, that could work for you. Everybody will talk about the hat Jay Powell was wearing, and they won't be worried about what you had to say. He declined.
Well, listen, great stuff as always. You, man, have earned it this week in a big way. And for anybody who's missed any of Mike's conversations, all you have to do is head to Bloomberg Talks, our podcast feed, download it wherever you get your podcast. Michael McKee, you're a gem, hat, no hat. Bloomberg News international economics and policy correspondent Michael McKee, safe travels, joining us from Jackson Hole, Wyoming. You are listening and watching Bloomberg Business Week on this Friday. Carol Master along with Jess Metton in for Tim Stanovic. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. We got 39 minutes to go until that closing bell clangs on Wall Street, and then it will be on to the weekend with the Dow, the S&P, NASDAQ, all pushing higher. S&P right now up by 39 points, up 0.9%, 44.16 on the S&P. And on this Friday, a Jackson Hole Friday, we've got the Dow up 305 right now, up 0.9%. NASDAQ, the composite index, up 1.2%. The NASDAQ 100 index up by 1.1%. 10-year yield 4.24%. The 2-year worth repeating. Not that I've said it yet, but we've got the 2-year at 5.06%. We'll say that again, 5.06% there on the 2-year. Spot gold down $3 the ounce to $19.13. Drop there of 0.2%. And West Texas Intermediate crude up 1.5%, $80.23 a barrel. So with Jay Powell's speech behind us, as well as NVIDIA earnings, Wall Street's focus will shift next week to jobs when we get the August employment report next Friday. Wage growth will be closely watched. Neela Richardson is chief economist at ADP, and she sat down with Bloomberg Radio at the Jackson Hole Symposium for Central Bankers. She told us the employment picture is still bright.
So we're still at record lows in unemployment. And what we've had is when one door closes, like large firms in tech hiring, another door opens, like small firms. In fact, over the summer, 60% of the new jobs added were from small firms with under 50 employees. These were the tigers of the labor market. Very different this year than last year.
And you can hear more of that conversation on Bloomberg Radio. You can hear it on the Close podcast. You can download it wherever you get your podcast. Auto workers have overwhelmingly voted to give union leaders the authority to call strikes against Detroit car companies if a contract agreement is not reached. Right now, Stellantis shares, they're up by 0.4%. Ford shares up 0.2%. General Motors also up right now by just about 0.7%. So again, recapping, we've got the Dow, the S&P, and NASDAQ all pushing higher. S&P up right now by 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Friday. Jess Benton and me here in our Bloomberg Interactive Brokers studio on radio and, of course, on YouTube. Jess in for Tim Stenovic. Well, Jess, I think it's safe to say it was the shot heard around the country. We're talking about the mugshot of former U.S. President Donald Trump, made public after he surrendered last night to an Atlanta jail on charges that he conspired to overturn the 2020 election. A polarizing image of the 2024 presidential hopeful that really prompted his return to the platform formerly known as Twitter. There's been a lot going on. And just safe to say, it's been an incredibly busy week on so many different fronts. We just talked about Jay Powell and the Fed and monetary policy. Also busy for U.S. politics.
Yes, as well, earlier this week. So another key focus in addition to what we were watching with Trump.
Yeah, absolutely. So let's get to it. Let's get a roundup on all things U.S. politics. For that, we turn to Wendy Benjaminson, Bloomberg News senior editor on Zoom from Washington, D.C. Wendy, I know you've been running, I'm sure, around the clock here. Thank you for being with us. So let's start with the mugshot. Is it another line, another paragraph, or another chapter being written in U.S. history this week? Which one, or is it soon? Is it just too soon to tell?
No, this was certainly an inflection point in American history to see a mugshot taken from a county sheriff's office, county jail, of a former U.S. president. Richard Nixon didn't get mugshotted. It was just, this was a real moment. And Donald Trump, who, whatever anyone thinks about his politics or his personality, is certainly a genius at marketing himself. He gave that scowl, where he was looking, almost with dark Brandon eyes, if you will, out at the camera, looking extremely angry. He is already marketing this, using the photo to fundraise, and other people are using it to frankly, to laugh at him. It's just yet another weird moment in this weird confluence of events here.
Walk us through what happened in Georgia this past week, and also, more importantly, what's next, because people are looking ahead to that.
Sure. So what happened in Georgia this week was that this was the week after a grand jury in Georgia indicted Donald Trump and 18 of his co-defendants, including his own legal team from the 2020 election aftermath. And they were all indicted on a sweeping racketeering indictment for their efforts to try to overturn the election. So this week they had until today to turn themselves in for booking. So each of them came in, they made a bond agreement based on the number of charges against them. So Donald Trump had a $200,000 bond. Rudy Giuliani, his lawyer and former New York mayor, had $150,000, and it went down from there. And then they had to turn themselves in to be booked and go fingerprinted and having their photos taken. And now we wait to see when that trial will start. On this coming Monday will be a hearing in federal court on the other indictment, the federal indictment that charges Donald Trump with trying to overturn the election on a federal basis. And on Monday, there will be a hearing to set a trial date for that. Now, Trump's lawyers don't want it to happen until after the election. And Jack Smith, the special prosecutor working for the Justice Department, wants it to start right in the heat of the election, although that's not his reason. His reason is because defendants are entitled to a speedy trial.
Right.
So we'll just have to see how these arguments play out, but it's going to be another fascinating week with this case.
Wendy, as you talk to political consultants, you and the team there in the nation's capital, which has the biggest, I guess, legal risk, political risk for the former president? Which of these cases?
I think we all tend to believe that the classified documents case is sort of I mean, juries are human. They bring a lot more than facts into their decisions. They bring, their humanity and their emotions and their politics into it. So we'll have to see how it goes. But on the law, it's the clearest cut case. There are hundreds of emails there with the National Archives begging Donald Trump to return these documents and him sort of saying, what documents? And then there is now evidence that he had people turn off the security cameras so he could hide the document. There are videos of him showing the Pentagon's war plan for not a real plan to attack Iran, but the Pentagon plans for all sorts of contingencies. And that's top secret. And he was waving it around to people at Mar-a-Lago. So there's no question that he kept the documents and that he thwarted efforts by the government to get them back. So that seems like the clearest cut. The other cases against him are really sort of novel in their approach. Was it fraud to pay hush money to Stormy Daniels so she wouldn't talk about their affair before the election? Were his actions to overturn the election, both at the federal level and the Georgia state level, were those actions crimes? That's very unclear right now. And so I think if you were going to bet which one would be a black and white, letter of the law sort of case, it would be the documents case.
I'm curious about, in this latest indictment, who faces the biggest legal repercussions from their associations with the former president?
Well, I mean, all of them face prison time, and that's a really sort of hard thing to come to terms with. If you were loyal to a president and you thought you were doing your job, or you knew it was illegal but you wanted to do it anyway, I mean, that's prison time. I'm quite sure, I've never faced it, but prison time is scary. And I think that his former chief of staff, Mark Meadows, we believe he cooperated with the federal case, and that's why he wasn't indicted in that one, but he didn't cooperate in the Georgia case. If I were him, I would be looking at my legacy. He was a very effective congressman and then White House chief of staff, and he might, want to think about what he's going to do. Rudy Giuliani is a household name, especially on the East Coast, where he was New York mayor. He ran for president. He, was a very famous guy who also put the heads of the 5 mafia families in prison under the same kind of charges now faces in Georgia.
Hey, Wendy, just got about a minute left here. So we had obviously this focal point before, the mugshot that was heard around the world or heard around the country because of the former president turning himself in last night. We had the Republican debate. We've just got about 45, 50 seconds. In terms of who is still the winner in terms of out in the forefront of getting that Republican nomination, is it still Donald Trump? In other words, there were no political casualty as a result of all of this stuff this week?
There really wasn't any political casualty. The polls I've looked at since the debate show nobody moved. Donald Trump is still far and away the front runner, followed by a distant second, Ron DeSantis, and then everyone else comes back from that. However, Vivek Ramaswamy and Nikki Haley had some really viral moments that I think over time, as people watch them, may help them tick up a little bit in the polls. And certainly have more name recognition. And there are lots of Google searches now for Vivek Ramaswamy. So, they certainly get some more recognition.
Right.
Whether they inch closer to the nomination, so far it doesn't look like it. But there's another debate at the end of September, so we'll see what happens then.
Yeah, it makes me wonder who's vying to be Donald Trump's running mate and who's still running to be or trying to be president. It just makes me wonder. Yeah. Wendy Benjaminson, thank you so much. Bloomberg News senior editor on Zoom from Washington, D.C. We're going to stay in D.C. and toss it over to Nancy Lyons with an update on world and national news. Hi, Nance.
Thanks, Carol. The deadline to surrender at the Fulton County Jail has passed for the 19 defendants in that Georgia election interference case. Bloomberg legal reporter Eric Larson with the update.
One individual, Harrison Floyd, he's the former director of Black Voices for Trump, did not reach a bond and is currently in custody. So we'll see what happens with that.
Bloomberg's Eric Larson reporting former President Trump is already capitalizing on his booking by having his campaign sell T-shirts with his mugshot for $47, although Trump admits having the mugshot taken was not a comfortable feeling. On Monday, former White House Chief of Staff Mark Meadows will be in court seeking to have his case in Georgia moved to federal court on the grounds he was a federal official performing official federal duties after the election. Palm Beach County, Florida State Attorney Dave Ehrenberg tells Bloomberg Sound On Meadows has about a 20% chance of convincing the judge.
It's pretty clear that Mark Meadows was doing things that were way beyond his proper role as chief of staff. He was going to other states, talking to state legislators about overturning the election. So I think it's unlikely he succeeds, but he definitely has the best chance of any of them to get it done.
Hear more of that conversation with Dave Ehrenberg on the Sound On podcast. You can download that wherever you get your podcasts. Scientists say they fully sequenced the Y chromosome for the first time. That means they have new information that could give insight into male infertility and other health issues. Published in the journal Nature, the study fills in the half of the human Y chromosome that had been missing since the same group of researchers tried 20 years ago. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We've got the Dow, the S&P, NASDAQ all advancing. The S&P just off session highs, but still close to the highs of the day. It's a Jackson Hole Friday. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid off these session lows. The Dow is currently up 285 points. S&P's gained 35, while the NASDAQ is up by 134. The U.S. 10-year yield at 4.24%. Gold is down 3, oil trading in the green, and Bitcoin is little changed. Among the main 11 S&P sectors, all were trading in the green, led by gains in energy, consumer discretionary, and the industrials. And leaders to the upside, the Dow, Salesforce, and Intel. Fractional losses in Amgen. In deal news, Reuters report that Hostess Brands is exploring a sale, and cyber startup Wiz is weighing a potential bid for SentinelOne. In other news, Boeing readies a 737 MAX delivery restart in China after 4 years. And wrapping things up, Nike is higher by 1% today for the first time in 11 and is looking to break its longest losing streak since the 1980 IPO. Live from the first breaking news desk on Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. Have a great weekend, and to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Still thinking about our star and all the stars.
So many stars.
Of Jay Powell and company. Hey, everybody. Carol Massar along with Jess Metton on this Friday. Jess, of course, in for Tim Stanovic. And we've just got under about 17 and a half minutes left, getting ready to wrap up the Friday trade and the week overall. We've got stocks just coming off, as you heard from Charlie, their best levels of the session. And Jess, we did see definitely a spike in rates earlier on. We've moved off of it, but nonetheless, you got a 2-year that's above 5% or right at it.
Right, and especially we've seen the move in the 10-year as well, and a lot of my conversation go into how fast and the speed of that and what that can translate into moves in the broader stock market. So I want to get straight to our next guest. Who better to chat with us about this than Nancy Tangler, Chief Investment Officer at Laffer Tangler Investments. It's always really great speaking with you, Nancy. And I first want to start off because we did hear, as you know, from Fed Chair Jerome Powell earlier this morning. What's sort of your takeaway from what he said, and how do you think this could impact the stock market heading into what's typically the worst month of the year in September?
Yeah. Well, thanks for having me, Jess, on a Friday afternoon. Listen, I didn't hear anything new. I thought it was kind of yesterday's news. And then there was this sort of hokey reference to navigating this with the stars and on a cloudy night. I mean, I think what we know is that the Fed is closer to being done or is done. And that real rates, if you go back and look historically, we saw a spike in the 5-year tip after his comments. We got to like 2.26 or something like that. But if you go back and look in the 90s, real rates kind of vacillated between 2 to 4.5%, and yet we still had an environment where stocks did extraordinarily well. So I think that hopefully the Fed is fading into the background as we focus on fundamentals, and that's really the question. Is, for example, the GDP now Atlanta Fed number of almost 6% GDP growth for the third quarter? Is that real? Is that correct?
Do you think it's real, Nancy? I'm so glad you went there. And our Mike McKee has said these aren't reliable numbers, or they move around a lot. But a lot of people keep pointing to it and saying, look what's happening.
Yeah. Well, I don't think so, Carol. I don't think it's sustainable nonetheless. I mean, I think we know from earnings this last quarter that companies did a much better job than Wall Street expected in not only delivering earnings and revenue beats, but expanding margins. And so I think that is important to keep in mind. But we actually think you're going to see a little bit of a spike in inflation and probably the PPI. We got the Ulta numbers today, and their margins were lower than expected because of higher supply chain costs. And so I think we're going to start to see the higher oil prices, higher prices of copper, other commodities trickle back through. And we're working off of low base effects as we move forward. So I don't think it's an end to the decline in inflation, but I don't think the market's prepared for it. Let's just go there. And so I think we'll get some sort of a reaction.
I know at various
months.
points this summer, you were overweight technology, but you did take some profits to some high-flying names like Broadcom, Palo Alto, Amazon. What are you buying? What are you selling?
So we've been adding to some of the short cycle cyclicals, so a name like Carrier, for example, but also just sticking to our theme, Jess. I mean, our theme has been old economy companies that are embracing the digital revolution, and then the suppliers of the arms and the picks and shovels. So like if you look at a company like PepsiCo, which we swapped out of Coke into Pepsi this summer, this is a company that says it's a technology company that just happens to sell snacks and beverages. And now you've seen their involvement in the Instacart deal. So that's something that we like very much. McDonald's, for example, had more downloads, 4 times as many downloads of their digital app than Starbucks did last year. And that allows the company to expand margins and increase growth. So those are the kinds of names that we're adding to and looking at. But we still like technology, and on weakness, we will continue to add to names like Oracle or Broadcom or NXPI. We like the semi space, of course, very much.
Or NVIDIA?
So waiting for my chance, we missed it. It was a buy in our valuation work not so very long ago. But yeah, of course, it's a once in a lifetime opportunity to own a big growth driver. This is analogous to Amazon early days.
So do you think it's kind of crazy? Like all of a sudden, is it Mike Wilson and among others?
Yes.
It's like, oh, look what happened to NVIDIA.
Right.
Oh, the rally's over. Like kind of throwing in the towel. Is that a little bit of an overreaction? Because look at how far NVIDIA has come this year.
Oh, yeah. Listen, the bears rarely get to be in charge. And so once they get on stage, they're loath to get off. It is not a flash in the pan. AI is not a bubble. And there's a lot of ways to play it, NVIDIA being the premier way, of course. But you can own a name like Microsoft. You can own a name like Broadcom and or Oracle. These are names that are playing around the edges, but are critical and important players in the AI space. And eventually there will be other names that will come, to the fore, IPOs. But right now we want to own the largest cap, most secure and reliable names in the space, and also enjoy the convergence between cloud computing, AI, and digitization. The secular tailwind behind this phenomenon or fourth industrial revolution is big and long lasting. And so you use dips to add to your holdings.
What's the top question that you hear from your clients?
I mean, I think people are still scared that I had a client call me and say, we're in a bear market. And I was like, no, actually we're in a bull market. But they're really focused on volatility and the headlines. And
so they're still concerned.
I think so. I mean, we spend a lot of time educating our clients, staying in front of them during periods of negative stock performance, but this is just a correction in our view. And so we, again, as I said, are using it to round out our holdings. I'll just say one more thing. Going into 2020, we couldn't find any cheap, high quality companies. And so we put a hedge on our clients' portfolios. Because of the lack of breadth in this rally, we're still finding really attractive names at attractive valuations. And so that to me tells us this thing has legs.
Well, fascinating. And listen, Nancy, don't tell anybody, but we save our favorite market guest for Friday because we get to talk about the week overall. So thank you so much. Don't tell anybody. Nancy Tengler.
All right.
We really appreciate it. Have a wonderful weekend. She's Chief Investment Officer at Laffer Tengler Investments, author of The Women's Guide to Investing, joining us from Nevada. That book, by the way, already on Amazon's best-selling pre-order list. It will come out on September 29th, but we're going to have her come back, too, and we'll talk a little bit more about it, especially when it is officially released. But yeah, I think that's kind of interesting because women sometimes get pushed to the wayside.
Yes.
Like, it's like guys, like, all right, what are you doing for your family? And
right.
It's important to think about women and
that's something
how
she's
it
really
has to
passionate
relate to
about
them.
too, that she really cares about in her spectrum. So I've known Nancy a long time. It's always really great getting all of her insight in all things markets.
Yeah, great perspective too, right? Because she's seen a lot of cycles and
She
understands euphoria and when to be a little bit nervous or when maybe it's on the money. Speaking of on the money, folks, we've got a rally underway on Wall Street and on track to see some gains overall for the week in some of those major equity averages. I think all of them, in fact. Stick around. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg Boeing is preparing to restart delivery of 737 MAX jets to China for the first time in 4 years, a long-awaited breakthrough that would bolster the playmaker's comeback from one of the worst crises in its history. Sources say the initial handovers are expected to take place within weeks. Boeing shares, they're up by just about 2.4%. Nordstrom CEO Eric Nordstrom says losses from theft are at a historic high. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, Nordstrom is the latest major retailer to call out the rise in crime at its stores, and it's all a sign that retail execs are becoming accustomed to the rise in what they call shrink, an industry term that includes shoplifting, employee theft, and damaged goods. Execs, industry organizations, and law enforcement agencies do say criminal organizations are increasingly stealing millions of dollars of merchandise, which they then illegally resell. This week, Dick's Sporting Goods missed analyst estimates largely because of more theft. Charlie.
And that's Denise Pellegrini reporting. Dick's, by the way, is moving lower again today, down 1.6%. Nordstrom, after its earnings report, slumping now by 7.7%. Gap shares are gaining after the apparel retailer reported stronger than expected adjusted EPS for the second quarter. Gap up now by 7.1%. And Rite Aid said to be preparing to file for bankruptcy in coming weeks. Rite Aid shares down now by 51%. Those are some of the company stories we're following for you at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, Carol Masser along with Jess Matten, who keeps a watch on the markets for us constantly here at Bloomberg. She's in for Tim Stenivek, so she's watching with all of us the trade today. It's an interesting one, and we're going to head over to our TV colleagues in just a few minutes, Jess, to wrap up the day and the week. Having said that, we got some news, I guess about an hour and a half or a couple hours ago about Instacart. And they have filed for an IPO. It's applied to list on the NASDAQ under the symbol CART, nice one. And this has been one of the anticipated ones.
It definitely is, and especially when you're thinking about the IPO market in general, and especially on the technology side. I mean, this is a grocery delivery company, but it does plan to go public on the NASDAQ. So it kind of brings up these questions. If we've seen other IPOs recently, Kava is one of them, one of the more popular ones. So kind of wondering how many more we might begin to see this, because obviously when you think about, we always talk about the Federal Reserve and the macro environment and higher rates, but are we beginning to see more companies start to go public? So this is an interesting signal here. Slowly. I mean, extremely slow.
I mean, they filed confidentially to do it last year, and then they delayed it last October. So they're obviously feeling more confident about this environment. All right, so we're watching that, got that news, and then Boeing shares up about 2.5%. A story, an important one, Boeing getting ready to restart delivery of 737 MAX jets to China for the first time in 4 years, according to people familiar with the matter. So this would be a big deal and a long-awaited breakthrough. It would bolster Boeing's comeback from one of the worst crises in its history. And China, to say the least, an important market for Boeing.
It is. And the plane maker pulled 2 aircraft out of storage this month, and the first handovers are expected to happen within weeks. If you look at that stock year to date, Carol, for Boeing, that's up about 17% this year, ticker symbol BA for that stock.
Yeah, so it's really interesting because I think it wasn't earlier in the week there was some concerns again, and we saw the stock dragged lower. So this is a big deal for a company that has, for several years had to deal with the problems with the 737. So this would be a big move in the right direction, certainly for Boeing, and certainly if you're someone who's looking to be bullish on this company. All right, folks, just a couple of minutes left in today's trading session. We're just coming off our best levels. We have tech, NASDAQ, once again outperforming. It's up a full 1 percentage point. We're going to count you down to the close. Head over to our TV colleagues. Don't go anywhere. Jess and I and Scarlett and Shanali, Beyond the Bell, starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day on this Friday. Scarlett Fu and Shanali Basak here, counting you down to the closing bell. And here to help us take you beyond the bell with the global simulcast, Carol Masser and Jess Menton. Welcome to all of our Bloomberg audiences across television, radio, and YouTube, and streaming on Originals. As we look past all the Fed speak, to look at a market that is...
Aren't you exhausted?
I am exhausted.
I'm excited.
I think the markets are relieved, though, right?
Day's almost over.
Really, right, no fireworks, I really feel like, out of Jay Powell. Just more of the same, like, we got the memo, we get it, you're going to watch data, you're going to watch stuff, and if inflation is still a problem, we're going to continue to trend higher. Having said that, and Jess and I, we've been talking about this, you've got your major equity averages on track, for the first up week after 3 consecutive weeks of declines.
Yeah, their first up week in August, so seeing what this means, especially because August and September. We talk a lot about this being more seasonally weak time period of the year. So that's going to be interesting to see, obviously, how and whether these gains can continue on going into next week.
There are a lot of huge catalysts that are coming up in the fall. That includes that potential looming government shutdown. We were talking about it, student loan repayments. There's a lot to look forward to, and you've got to wonder how this month ends, knowing that there's so much rockiness potentially ahead.
That's why everyone keeps talking about this second half weakness, but even as they warned about the second half weakness, everyone's still wowed by how well the economy did in the second quarter, and those Atlanta GDP now forecast for 6% growth in the third quarter. All right, we have the closing bells approaching, and again, we have a rally on our hands. We've come off a little bit here in the last 20, 30 minutes or so, but you still have a very solid advance for the day, and it does allow us to end in the green for the week. There you have the closing bells. The Dow Jones Industrial Average adding 2/3%, ditto for the S&P 500. The NASDAQ leading the way, up by 0.9% to 13,589. I like what Jim Bianco said. There's two stock markets. There's one with 7 companies, and then there's everything else.
I love Jim Bianco. Having said that, guys, you want to guess what the top name is in the S&P 500 this week?
For the week?
Yeah.
NVIDIA? No.
Tesla.
Is it really?
It's actually kind of close. Tesla, Moderna, and Palo Alto Sonali are all up 10% for the week overall.
And for the day, every sector is really up in the green today, Carol. What a good day we've had over here today. But those were led by the consumer discretionary auto companies here. Remember, that was a sector that saw some weakness yesterday. Energy stocks up in the green more than 1% today. Once again, oil prices were up, remember. The least of the gains were seen in financials, communication services. A few sectors pretty much flat, but a lot of green on the screen today to end an up week.
All right, guys, let's get to some of the individual gainers. Sonali do in the major sectors there. Affirm Holdings, oh my God, up almost 29% in today's session. Coming out, fourth quarter revenue at the company beat expectations, helped by an increase in transactions on its platforms. You had Citi upping its price target to $565 from $495. Just check it out. Stock closing, as you can see, that can't be right. That's got to be a different price target, so forgive me, because that doesn't make sense. So anyway, that must be wrong, but the 28% is right.
Yeah.
Coming off its earnings. All right, let's get to the Gap because it's up about 7% just off its highs of the session. It reported stronger than expected adjusted earnings per share for the second quarter. We broke these earnings after the close, and this was despite a second quarter comp sales miss. Jefferies saying the combination of a healthy margin results and disciplined expense management driving the beat in the metrics. So this is a company that's got a new CEO, and they're trying to figure their way. They're hoping the guy that saved Barbie over at Mattel can really change some things at the Gap. And Intuit, this was top in the S&P 500 and the NASDAQ, up about 4%. The company reporting its fourth quarter results and gave an outlook that analysts said investors may find disappointing, although it could also be conservative. So I guess investors kind of liking what they had and maybe hoping for some more stuff to come, and maybe it is conservative, and so they're upbeat, and that stock's up 4%.
I'm taking a look at what's happening with Advanced Auto Parts. That stock ended up finishing down close to 6%, so that was its worst day since June 1st, and we all did see those earnings that did come earlier this week that did miss estimates, so you are seeing that stock down once again. And then we were just talking about retailers with Carol, looking at Nordstrom on the opposite side of this. More broadly, its adjusted earnings per share did actually beat estimates, and then it also had improved sales at Nordstrom Rack, which a lot of people are obviously following. But unfortunately, they did see weakening industry trends, and then it also flagged some commentary when it came to the earnings call on what we've seen with other retailers like Dick's Sporting Goods earlier this week that were talking about sort of these heightened either credit card delinquencies, and then also theft has tended to be a problem with some particular retailers as well. And then I'll end with Marvell Technology being down, looking at that stock about close to 6%, so it's worst day since August 24th.
All right, good stuff there on the gainers and losers. Let's get back now to our special coverage of the Fed's Economic Symposium, Policy Symposium in Jackson Hole. Our very own Tom Keene joins us now for an exclusive interview with European Central Bank President Christine Lagarde. Tom?
Thank you so much. On Bloomberg Radio and Bloomberg Television, really a special moment in a special year here at Jackson Hole. And of course, everything about this year is coming out of the pandemic. And where do we go to from here? Joining us now, the President of the European Central Bank, Christine Lagarde, who stopped traffic here. The bison stopped walking around the fields over the importance of this speech. I was talking to our wonderful Matt Boesler, covering the New York Fed, and he's here supporting the U.S. team. And the first thing he said, Philip Lane. So the speech that you put together here that we're going to dive into here in the next 13 minutes, how was it constructed off of your team with Dr. Lane?
It's a little bit more complicated than that. Typically, my speech works as follows. I pick the theme, which in this case was not complicated because Jackson Hole has indicated that we have to concentrate on the shifts, and there are major shifts. So I pick the theme. My team produces a first draft that I then look at, correct, changes, amend, we reconstruct a bit. Then I pass it on to Philip, and Philip looks at it, brings new things into the substance, will amend this or that. Then it comes back to me again, and I will polish it one more time. Then I share it with a few more economists in the team. I don't take all their comments, because if I did, it would not...
You've been legendary for that. That's called a Lagarde no, right?
That's true. Yeah, because everybody wants to have their little thing in there. And before you know it, it has no line, no rationale, no logic, no conclusion. And I don't want that.
We'll extend this to a 1-hour interview. There'll be some logic to this discussion today. The rules of the road, folks, for all of you on radio and television, is at an academic conference. We don't focus so much with any central banker about what are you going to do at the next meeting. It's about the architecture of the speech. And this is an exceptionally original speech off of the pandemic. Where do we go from here? I want to go back 4 months to your speech in New York, where in Wyoming, and this is Ernest Hemingway's Wyoming, you talked about suddenly, the sun also rises, there is gradually, and then it becomes suddenly. What is the tension you see now? What is the fear you have that the gradual now could be suddenly painful?
We are facing major shifts. I'll mention 3 for you. One is there's a complete change in the labor market. There's a complete change in the energy future that we are facing. And there is a complete shift in how geopolitical forces organize our economies. Not to mention in the background the climate change impact on our economies, our life, and the imperative that it becomes, as we have seen during the whole summer, for instance, in terms of major heat waves, major hurricanes, and so on and so forth. So you've got these 3 key shifts and the background of climate change. And we need to address each and every one of these 3, which we inherited from the pandemic, which we inherited from the major supply chain disruptions, which we inherited from the geopolitical tensions that we see developing between the United States, Europe, Japan, and many other countries around the world, in particular China.
I was talking to our Alex Weber out of Frankfurt on this speech, and I want to take the 60,000-foot nature of the speech, and I can't imagine Draghi, Duisberg Trichet giving this speech. It's original to you. But if I look at clarity, flexibility, humility, your backdrop out years is exactly the same as your backdrop on September 16th, which is the original structure you have is to pick 2 nations, the tension between Germany and the tension with Portugal as well. How do you get to these lofty goals given the fractious original nature of the ECB?
I would disagree with that. I think the ECB and the way it has been constructed is intended for collaboration, for controversies, for debates, but at the end of the day, for large consensus. And this is how I have been operating at the ECB. The fact that monetary policy is really European monetary policy is a plus. We are bound by the same currency, the euro. We exchange the same banknotes, maybe digitally one day. But this is what brings us together, and it's part of the culture. Now, then you have the fiscal situation. Then you have the debt situation. Then you have different markets and different constraints locally in the 20 member states. But the European Central Bank brings all those national central banks together. Not without pain, not without, discussions, as I said, controversies occasionally, and not always by unanimous consensus.
There is dissent at the ECB?
Occasionally there is dissent, absolutely. And, we have to learn how to live with it. And my job is to measure how profound the dissent is and who expresses and shares it to a point that he or she will not be prepared to compromise and to move to the consensus.
A single sentence in this original speech breaks in established regularities. Do you have an operative theory right now, whether it's again to September or it's out 6 months, a year? Is there a set of economic theories you're working with, or is it ad hoc each and every day out of this pandemic?
One, it is deliberately, decisively data dependent, which forces us to react meeting by meeting. We cannot, given the fact that regularities are no longer regular, and we have more irregularities than regularities, we cannot exclusively rely on inflation outlook as determined by models. We have to bring into our reasoning and our considerations other elements, other measurements, including underlying inflation, as we see it empirically now, as we anticipate it coming up. We also need to measure the impact of our monetary policy. How fast does it produces financing tightening, and what consequences will it have? So in a way, the break of these regularities forces us to have a larger spectrum of indicators and to think in a much broader way about the consequences of what we decide.
One thing that's fascinating here, and Jana Randall in Frankfurt really emphasizes to me with the deterioration in economic data. I'm sure you've been more than briefed on it. In Europe and frankly around the world, China as well, there's this waiting between conventional monetary dialogue and, to use an American phrase, OMG, there's a growth slowdown. As you go into your sequence of data-dependent meetings, what is the weighting now to growth or real economy economic data versus a monetary policy, which a process almost that you say is under threat right now?
First of all, I would not put in the same bag Europe and China when it comes to clarity and comprehensiveness and transparency of data. We are totally transparent. We aggregate our national data at the regional level, and we have very solid institutions that are in charge of those data. So I would challenge anybody who argues that our data is not correct and not reliable. That is as reliable as it can get. Point number one. Point number two, the best way to have the highest level of confidence is to look at a series of information, data, model produced, empirically provided, anticipated by financial analysis. That's the best job that we can do at the moment in order to deliver on our stability mandate, which is to bring inflation back to 2% in the medium term, which we will do.
I can mention this with China, but what I can mention is you are original in that you have real-world export-import experience. I believe I met you when you were French trade minister.
That's right.
Newly appointed at whatever.
2005. 2005. Yeah.
That was a few years ago, folks. Christine Lagarde, as simple as I can say, the statistic in your speech today of real imports declining 30%, if we get what Georgieva and Lagarde are both talking about, which is a regional blockism, a fragmentation. How close are we to that?
It's a worrying situation. If you look at the number of protectionist measures that are being engineered, implemented around the world, if you look at the volume of trade, whether it is pure volume or momentum, it is either stable or on the decline. And the fragmentation is something that is much talked about, but that we are now beginning to see in terms of investment, in terms of market penetration by various companies around the world, and the control of FDI, for indirect investment, in many countries, including in Europe, is now being scrutinized in a much, much thorough way. So we are seeing not deglobalization.
Right.
Let's not kid ourselves, but a much more guarded, much more careful target of supply chain development, of setting up foreign investment abroad, and the purpose of those investments are different. There was a time when you were setting up facility in a place where cost was lower.
Right.
Now you set up an investment, you set up a facility because you're going to penetrate that market, and you're not relying on, input, output.
You mentioned tit-for-tat inflation. Is that what you confront at the next meeting and frankly at the meetings into 2024?
We will be very, very attentive to wage developments, because obviously one of the strongest portion of the economy where prices are going up is services. And services is labor intensive. Services is generally less interest rate sensitive than others, where capital expenditures, of course, are more sensitive. So wages, as they develop, will matter enormously, which is why it's critically important that inflation expectations remain anchored at 2%. If trade unions and business associations appreciate that in relatively short order, inflation will be back to 2%, they will not want to fuel more inflation by having wage or margin increases that would not be consistent with that.
The language of this is accommodative, restrictive. Dominique Constant at Missoula would say there is super restrictive, talking about the U.S. Central Bank. How do you gauge the parlor game of interest rate trajectory now, given your new theme here? How do you take the minutia of analyzing the up and down, the restrictiveness, just as one example, with these larger thoughts of we need a changed behavior in economics?
We take all that very seriously. If you pick the example of the financing tightening, we look up and down the stream of all financing channels, from credit, lending, money markets, sovereign bonds, the whole gambit of it, to appreciate how much tightening is produced by our restrictive monetary policy. And we have to factor that into what I have called my three criteria, if you will: inflation outlook, underlying inflation, transmission, and strength of the transmission of monetary policy.
You end the speech, and folks, really, for those of you in economics, this is truly an original speech from the ECB today and from Christine Lagarde. Keynes, the difficulty lies not in the new ideas, but escaping the old ones. Which one are you trying to escape September 16th? I mean, not to bring the meeting into focus here, but you need a new idea on September 16th. What's it going to be?
I think what I meant using this particular quote is that we cannot just stay in the same box all the time and assume that the models that we have been using for a number of years are going to produce the result that will guide us towards the right decisions. And I think by adding, as I said, underlying inflation, strength of the monetary policy transmission, we bring new ideas and new principles into our thinking and our collective considerations.
One final question, if I could, on a beautiful day in Wyoming. You have to fly back to Frankfurt and sell this speech to a very original set of nations in Europe. What will be the response, not only the response at your meeting on September 16th, but the simplistic statement of between the hawks and the doves? How will there be a uniform response, or will this engender an immediate heated debate in Frankfurt?
I took the precaution to discuss that with some of them. And I think that the general principles of those three shifts, the responses that we must provide, and the new key principles of clarity, humility, and transparency, clarity, flexibility, and humility will stand, and I think will be appreciated and respected by my colleagues on the Governing Council.
Oh, we look forward to September 14th, truly an historic day.
I can't guarantee the same beautiful landscape as we have.
The hills are alive with the sound of music. Christine Lagarde, thank you so much. In New York, on Bloomberg Radio and Television, Good afternoon.
All right, so grateful to our Tom Keene there at the Jackson Hole Symposium, and there, of course, with the president of the European Central Bank, Christine Lagarde. Few headlines, and I feel like it mirrors some of what we got from Jay Powell, chair of the U.S. Central Bank, earlier today. Madame Lagarde talking about the European Central Bank is data dependent, decides meeting by meeting. And Jess says the ECB will bring inflation back to 2%. This is what we heard from Jay Powell earlier on.
And also reiterating from her about keeping rates as high as necessary to tame inflation. And Lagarde talking about how anchored inflation expectations are critically important. Not surprising that she would say that, but that they're going to be very attentive to wage developments in Europe. We constantly talk about wages here.
Right, the wage pressures, right, and how that plays into the higher inflation story or the stickiness of inflation. All right, if you missed any of that interview, be sure to head to Bloomberg.com or, of course, check it out on the Bloomberg terminal. Right now, though, markets have closed, and we want to just talk a little bit about some of your top business stories and any news after the close. Here is, once again, Charlie Pellet.
Hi, thank you very much, and here's what's happening. Dow, S&P, and NASDAQ all advance as we wrap up the trading week. S&P right now up 29 points, ending the week, heading into the weekend, just above 4,400, 44.05, a gain today of about 0.7%. Dow Industrials up 0.7%, up 247 points. NASDAQ, the composite index, up 126 points. For NASDAQ, that was a gain of 0.9%. 10-year yield, 4.21%, with a 2-year, 5.07%. Spot gold today down $3 the ounce to $19.13. That was a drop of just about 0.1%. West Texas Intermediate crude oil up 1.1%, $29.96 for a barrel of WTI. President Christine Lagarde says the European Central Bank will set borrowing costs as high as needed and leave them there for as long as it takes to bring inflation back to its goal. On Bloomberg Radio, you heard it moments ago, we spoke with Lagarde at the Jackson Hole gathering, and she told our Tom Keene the global economy is facing 3 major challenges.
One is there's a complete change in the labor market. There's a complete change in the energy future that we are facing. And there is a complete shift in how geopolitical forces organize our economies. Not to mention in the background the climate change impact on our economies, our life, and the imperative that it becomes, as we have seen during the whole summer, for instance.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Boeing preparing to restart delivery of 737 MAX jets to China for the first time in 4 years, according to sources. A long-awaited breakthrough for Boeing. Boeing shares up today by 2.8%. Those are our top business stories. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it all covered. Thank you so much, Charlie Pellet. You are listening and watching Bloomberg Business Week. Carol Massar along with Jess Metton. Jess in for Tim Stenovic on this Friday. And on the Bloomberg, Jess came across a story today about how J.P. Morgan Chase basically weighing in on the crypto world today, saying the recent sell-off in crypto markets is likely near an end, with long position liquidations, quote, largely behind us. This was a research report by J.P. Morgan Chase. And yet, they are making note that while regulatory and legal issues seem to be waning, at least for now, still to come, quote, a new round of legal uncertainty for crypto markets. And so, more on JPM's call, you can find it on the Bloomberg, but it's been a very interesting, we know the carnage, right, that we saw certainly earlier in the year, certainly over the last year, and a real rethink on crypto. And one of the things that many would argue and point to is that we've got to figure out the regulatory side of everything.
And that's always been the big question mark about what's ahead and how it does impact particular companies that are in that industry, and especially investors on where do you go from here when you're trying to invest in something so volatile.
Well, yeah, you want transparency. You want to make sure you understand the rules. So let's get into a little bit more of the regulatory side of crypto. Back with us is Mike Belshi, entrepreneur, scientist, one of the first 10 engineers on the Google Chrome team. So really is a forward thinker, if you will, when it comes to our evolving tech space and just how tech is kind of invading everything we do. Early on in the more developed crypto space as well, he's co-founder and CEO of BitGo. They provide security and operational support to global institution clients. So he's a good worldwide perspective. Joining us as we do every week at this time, our weekly look at crypto. He is on Zoom in San Francisco. Mike, hey, nice to have you back with us. How are you?
Doing great. Thank you, Carol. Thanks for having me back. Appreciate it. Always good to talk to you.
Well, we appreciate it as well. First of all, I just want to get an idea of, remind everybody what you do and kind of your vantage point. I always like to kind of set the stage for everybody. And I feel like those who are in it can describe it best. And then just kind of the level of activity and demand that you're seeing for your services in today's environment, and maybe how it compares to the peak of, let's say, Bitcoin, 68,000 back in November of 2021. How has the perspective changed?
Sure. Well, you introduced me as a technologist, which is true. That's my 30-year background, all the way back to Netscape a long time ago. But these days, actually, technically, I guess I'm more of a banker. So BitGo is a digital asset custodian, kind of the first of its kind that was built, I think, 7 or 8 years ago. We actually run 4 different trust companies across the globe today. We've got it in New York DFS. We've got South Dakota here in the U.S. We've got Switzerland. We've got a BaFin-regulated entity in Germany as well. So we run a lot of custody, and it started with a high-tech wallet platform. We pioneered how to do secure storage of digital assets long ago, eliminating single points of failure. And the reality is you can't build a reliable banking system if you don't have a great foundation. So that's what we aimed out to do in the beginning. We started with technology. We moved into custody. This is where we take all the keys in a regulated, qualified custodian, bankruptcy remote way. And then these days, we're actually moving on to the next level, which is really how do we build the market structure? And of course, you hear about a lot of lawsuits going on in the industry from regulators against certain players that are already in play. You hear new proposals about how to regulate or how to structure the markets for crypto. Should it be under the CFTC or the SEC? BitGo's trying to push on that too.
Even despite some of the crypto regulatory concerns that are out there, you were still able to raise $100 million in Series C funding. How tough is it right now to try to raise funding?
Well, I don't like to sound like a brag or anything, but it's brutal out there. Is probably the right answer.
So why wasn't it brutal for you?
Well, I hope to say that BitGo's achieved a level of success and excitement kind of on the go-forward basis. So look, our existing products have been working well. There's been a big flight to safety, just given all the concerns of the last year. There are a lot of failures on other parties in the ecosystem. So people are looking for somebody that's doing it right. BitGo's always taken a tried and true approach. We operate custody as the core of what we do. Custody is a different element than trading. We tend to not have any issues like with what's going on with other folks with their entanglements with the SEC, because what we're doing is holding assets on behalf of clients. And then on the go forward basis, people are excited about the market structure we're building. We announced this thing called the Go Network, which is basically introducing the first time where you can start to have a settlement distinct from trading, distinct from custody, so that you can start to have safe landing of assets, keep everything in cold storage, and yet still have access to full liquidity.
Well, then let me go back to how I started, Mike. So what's the level of activity and demand? I get it. It's like the regular, traditional financial system, right? You have your custodians that are out there for financial assets, if you will. And so I'm just curious, what's the level of activity and demand for your services, specifically in the crypto world, and how it compares to, I guess, I'm using November of 2021 as a peak because that's when Bitcoin was so high, and maybe that's just a random point, but I'm just curious what you've seen. Where are we? How would you kind of quantify it or describe it?
Well, the markets are a little bit down, right? So as a financial institution, the market prices are down. So our assets under custody, they were up, I think we advertised up over 64 billion in AUC. I think it was at the end of 2021. Our assets are down today because they're marked to a lower value against the US dollar, but we haven't lost the coins. The coins are all still in custody.
So it's just a value decline, not the actual coin itself.
Right. As soon as, Americans start measuring their wealth in BTC instead of in USD, we'll all be on the same page.
Talk to us about who your customers are, because I was surprised also to see Nike on that list.
Sure. We're a business-to-business and institutional player, so we don't hit retail a lot. There's some high net worth individuals, but funds use us, exchanges use us, payment processors use us. And then when you mention Nike, corporates are using us. Now, Nike in particular, they happen to be integrating with the NFT and some of the DeFi space. So as soon as you start talking about digital assets, we're unlocking not just cryptocurrency, not just tokenized securities, not just stable coins, but actually there's this other world as well of non-fungible tokens, which is basically digital property. And if you think about how technology has emerged, like with protecting digital property rights over the last 25 years, there's been a lot of different approaches, but I think NFTs are actually the first true digital asset property that can be used. So anyway, Nike's big on that space, and we're helping them with a number of efforts.
Are more companies doing that? That's where I kind of get the blockchain and kind of digital world in terms of when you think about digital property and whether it's intellectual property or things that you really want to kind of have, if you will, almost an address, that goes with them constantly. And so there's no question. So are we seeing more companies like Nike tap into you specifically?
There are a bunch of major brands that are all interested in figuring out how do they really show that the assets that they create are bona fide and real. So you see this from top designer brands. There's been a number of initiatives where they are looking to use NFTs as a way to say this is a true designer product as opposed to a knockoff. And then you've got loyalty programs that are being built. You've got gaming programs that are being built. So there's been a lot of growth in the NFT space. So for BitGo, as a custodian and a wallet provider, a lot of times these early industries, like the value of the things that they're trading are relatively small. But as they grow those businesses and they grow their demand, it grows a lot. And what does a bank do? What does a custodian do? Well, we're here to make sure that you give us the assets and we're going to give them back to you when you want them. And as the value goes up, you use higher and higher levels of security to protect it. So BitGo's building a full stack everywhere from the bottom layer of pure technology security to the next layer of how do you do custody in a regulated, safe way. And then above that, building liquidity sources, having insurance backups and things like that.
So, Mike, when it comes to a regulatory environment, what is it that you are looking for? Is it a decision on spot Bitcoin ETF? Is it the Ripple decision? What is it for you that you think is significant?
Well, what matters to all of us, actually, is safe understanding of the risks that are being taken by the intermediaries, the banks, that are in process, as well as basically the fundamental right that we always have access to money. And blockchain technology provides transparency to everything that's going on. You can't hide. You can't be asking others to sell while you're buying when we use it properly. So we can use blockchain technology to increase transparency and reduce risk. And frankly, instead of having to have these complicated, heavyweight, overbearing regulatory mechanisms, we can use technology to do those roles much more efficiently in a way that's then going to give the rest of us freedom of money, more reliable money. You put your money in the bank and you'll always get it back without having a concern about did that bank happen to put it into long-term T-bills when interest rates are rising in unexpected fashion. So we believe blockchain technology fundamentally changes the way we would build the financial system. It also connects us globally. Our job at BitGo, we think, is to make it so that everybody can ubiquitously access digital assets. That means businesses can access it. There's a lot of other companies that focus more on the retail side, but we want retail to be able to access it. And then once that's fully plumbed, we will see a better financial system.
We only have about 20 seconds left, but what do you plan on using the funding money from in the latest round that you had?
Look, we're building a business globally. So we have some growth outside of the US that's going on. Other parts of it are just growing conservatively. We have been in the space for 10 years at this point. We've managed our money very well. Even though 100 million sounds like a lot, we've raised less money than almost anybody else. And that's because we've got a pretty good business that runs fairly solid. Yeah. But we always want to have a balance sheet that our customers can count on.
What's harder, building Chrome or doing this, real quickly?
Oh, absolutely. Digital assets are much harder.
I kind of feel like I kind of knew the answer. Hey, Mike, be well. Have a great weekend. Mike Belshie, as you know, co-founder and CEO of BitGo. Let's head back to D.C., get another update on world and national news. Off to Nancy Lyons we go. Hey, Nance.
Thanks, Carol. The deadline is come and gone for the 19 defendants in the Georgia election case to surrender at the Fulton County Jail, and all of them met the deadline. Last night, Donald Trump turned himself in and had a mugshot taken. Bloomberg's Anne-Marie Hordern says he's already capitalizing on that.
Within really minutes, you had his Super PAC campaign putting out fundraising alerts, and they're selling his mugshot on T-shirts for $34. So they are already monetizing this.
Bloomberg's Anne-Marie Hordern says some of the money raised will be going into Trump's legal defense fund. A new poll indicates most Americans think former President Trump should stand trial before next year's presidential election. The Politico Ipsos poll shows 62% of those surveyed say the classified documents case should go before the election. 61% said the same about the election interference case. The death toll from the wildfire that destroyed Maui's historic town of Lahaina currently stands at 115, but hundreds more are missing. Maui County has now released a validated list compiled by the FBI of 388 people who remain unaccounted for. This is Police Chief John Pelletier.
The validated list has a criteria. It's very simple. It's a first and last name and a point of contact of who provided that name. Therefore, the 388, we are asking, if you're on this list, please contact the FBI number provided.
That number is 808-566-4300. Again, 808-566-4300. Chief Pelletier says they're doing everything they can to make the investigation as complete as possible. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ all advanced today. Stocks rose as traders sifted through a raft of remarks from Fed speakers, with Jay Powell saying officials will proceed carefully on whether to raise rates again, while signaling policy will remain tighter for longer. So what about the Federal Reserve and the inflation outlook? Nancy Tengler is Chief Investment Officer at Lafford Tengler Investments, and she was a guest right here on Bloomberg Business Week.
So I think that hopefully the Fed is fading into the background as we focus on fundamentals. And that's really the question. You know, is, for example, the GDP now Atlanta Fed number of almost 6% GDP growth for the third quarter, is that real? Is that correct?
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. S&P today advanced 29 points to finish the week just above 4,400 at 4,405, a gain of 0.7%. Dow Industrials up 247 points today. That was a gain of 0.7%, while NASDAQ was up 126, a gain there of 0.9%. 10-year yield 4.22%. With the 2-year 5.07%. Spot gold $19.13 the ounce, down 0.2%. West Texas Intermediate crude up 1.1%, $79.95 a barrel on WTI. Hawaiian Electric Industries slumped to the lowest since 1984 after the company said it will draw down on credit lines and suspend its dividend to preserve cash in the wake of those deadly wildfires on Maui. Hawaiian Electric today plunged 18.5%. Again, recapping, stocks higher, S&P up 29, a gain of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie might be interested in this. He's all over social media, and it's something we have been talking, Jess, I feel like a lot in the newsroom, just as of late, because it's something I certainly have noticed, is that I am increasingly using not necessarily Twitter or X, depending on how you want to call it. I've never been on Facebook. But we're noticing that folks in general are turning to other social media outlets to post, and especially if you are a professional.
And the one that comes to mind is obviously LinkedIn. I actually posted on there before we did our show to say, hey, I'm going to be co-hosting with Carol Massar
Why
this
did you do
afternoon.
that? Why?
Because...
Did you do it on Twitter or X too?
Actually, I did not do it on Twitter. I did it on LinkedIn.
See, this is, I feel like increasingly, and I find like our interviews by guests are posted on LinkedIn, not necessarily on Twitter or X. So let's get to it, because this is all in a story in the new issue of Bloomberg Business Week, already on newsstands, and it's online at Bloomberg.com/businessweek and on the Bloomberg. So let's get to it, because writing about it is Bloomberg News big tech team leader Sarah Friar. As you know, she's the author of No Filter, the inside story of Instagram. She's out there in our San Francisco bureau. So Sarah, I feel like it's time to write Who Knew? The inside story of LinkedIn. I mean, it is amazing how it just feels like everybody's using LinkedIn.
It really is a sea change, and something I've noticed just in the past few years. And I was developing this story based on that hunch, like, wow, people are all of a sudden posting there more. Like, it's not just the website that you put your digital resume on and then forget about until you get tons of messages from recruiters. It's a place where people are going to share their thoughts. And so I asked the company about this, and they actually gave me this new statistic that confirmed my suspicions, which is that the actual content sharing on LinkedIn was up 41% this spring from 2021. This is a 20-year-old network. That is incredible, shocking growth for a network of that size. So it just really underscores that people are feeling very alienated by the changes on X and on Instagram and on Facebook. And LinkedIn is really the only place where they can go for that kind of personal sharing, life update stuff that they used to do on Facebook.
Do you ever notice any people that are sharing too much, because it is sort of a professional work website?
Yeah, so I'm interested in what you mean by too much, because there are people that are
like, because
like
I feel like there might be a danger
time,
there,
like,
right? When this is a platform for especially
Yeah.
people that are
Well,
recruiters
that's-
are potentially
kind of
looking
like-
at you too.
It's kind of like an awkward weaving in of people
Right.
who like post about their vacation and then say like my boss is awesome about work from home. I think it's healthy and have a good balance. So they'll like tie it back to work somehow, or they'll talk about like having a new kid and say like, oh, our benefits are wonderful. So I think there's still a little bit of awkwardness there. And there's the transparent self-promotion of LinkedIn, which I think, we have all kind of become more accepting of. One thing that all the other social networks taught us, Instagram, Twitter, now X, everything you post on the internet to the public is part of your personal brand. It is strategic. There's no pretending that it's not. So LinkedIn was just like this nakedly strategic social network. Like everything you post has to do with who you are in your professional life. It's really less different from the other networks now than it used to be. Now that our culture has become more aware of what people use social media for, and that it does tie into the professional.
I have to say, Sarah, okay, forgive me, LinkedIn, but I felt it was for like old fogies, right? And it was like for boring stuff. But it's funny, my nieces, I have a bunch of them, and they're in their 20s. They're young, and they're like posting on LinkedIn. And especially they're out in the work world, and they see the value of kind of, sometimes they're doing stuff for work specifically, but just kind of putting content out there. It seems like it's really productive. Is it productive? Like, how does LinkedIn make their money? Is it subscriptions? I know there's different tiers and so on and so forth. Like, talk to us a little bit about the business model or how much we know about it.
So it's a little bit of a freedom that they have to be this kind of stable place for posting content, because they don't care as much about engagement on the feed as other networks do, because they're not primarily funded by advertising. What they want more is for you to be checking your inbox and posting, all your work information and whether you're interested in work, because that's the real business. They work with recruiters, they work with salespeople, and they charge the recruiters and salespeople a lot of money for advanced search tools to find who might buy their product, who might be a good fit for a role, and so if all your information is updated on LinkedIn and you're checking your inbox, that's kind of all they need to make money. And then beyond that, they're really leaning in where a lot of the other networks are pushing back. We've seen Meta, which owns Facebook and Instagram, pull back from news entirely in Canada. We've seen Elon Musk at X be very vindictive towards journalists and even ban journalists at some point, and downrank links from competitors like Substack. Now, the LinkedIn strategy is to embrace content and to try to work with news organizations and promote things that they think their members might want to see, and actually have a curation and editorial team, which Twitter used to have, which Meta used to have, but doesn't anymore. So it is kind of a place where people are sharing those, what LinkedIn calls knowledge-based content. Mm-hmm. And they said that that's what their people want to see. But knowledge-based content is really just content that's about what you think, which is what used to be so popular everywhere else.
Can I say, I almost feel like there's a gentility about it too, but go ahead. Yeah.
Well, the other thing that's happening on Meta, of course, is that they're going to be all about Reels, the short form videos, because they really want to compete with TikTok. But yes, the gentileness, that's the other factor. After Elon Musk took over Twitter, a lot of people wanted to leave because they saw that he was becoming a lot more permissive of the kind of user behavior that used to result in someone getting banned or suspended.
Right.
But all of that sort of hate and, rhetoric that could be harassing, that's I think more permitted now on X. And that led to people trying to find an alternative. Like, should we go to Blue Sky? Should we go to Mastodon? Should we go to Meta's Threads? well, there's a place that you already have.
Totally. I feel like I can relax when I'm on LinkedIn versus some other social media. No doubt about it. Hey, Sarah, we got to run, but it's a great story. That's Sarah Fryer joining us here on Bloomberg Business Week.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Nordstrom CEO Eric Nordstrom says losses from theft are at a historic high at Nordstrom, making it the latest major American retailer to call out rising crime at its stores. This week, Dick's Sporting Goods missed analyst estimates, largely because of more theft. Today, we had Nordstrom shares down 7.7%. Dick's Sporting Goods shares lower by 1.6%. A group of Tesla investors stands to recover an average of about $12,000 ahead for losses they incurred from Elon Musk's famous 2018 tweet that he had, quote, funding secured to take the car maker private at $4.20 a share, and then didn't. Let's get more on the story now from Bloomberg's Kimberly Adams.
Charlie, the SEC aims to pay the investors the $40 million plus interest that Tesla's chief executive officer and the company agreed to as civil penalties to settle a lawsuit by the regulator. That's just over half the $80 million the SEC reckons it lost from the stock's gyrations after the tweet, and a mere sliver of the $12 billion in losses an expert witness for a class of Tesla investors calculated earlier this year in a separate class action trial. A total of 3,350 claims will be paid out of the funds set up from the settlement if the plan is approved, according to the filing. That works out to just under $12,400 an investor on average. Charlie?
And that's Bloomberg's Kimberly Adams. Today we saw Tesla shares rally along with the rest of the market, up today by 3.7%. And those are some of the top company stories we're following at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
Jess Mitton here, filling in for Tim Stenovec, along with Carol Masser in the Bloomberg Interactive Brokers studio. We have more coming up, but first, let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. The war in Ukraine has now been underway for a year and a half, and the counteroffensive against Russia has gone on for more than 2 months. With Kyiv's forces only making marginal progress against dug-in Russian forces, there are real concerns among allies that the war could drag on even longer than expected. Bloomberg's Alberto Nardelli says Ukraine is walking a tightrope here.
It's a very difficult balancing act because on one point they need to set expectations high because that incentivizes countries to provide weapons for that push. On the other hand, it then leads to a challenge if some of those very high expectations are not met.
Bloomberg's Alberto Nardelli reporting from our European headquarters in London. The Kremlin today is rejecting allegations it was behind the plane crash that is presumed to have killed mercenary leader Yevgeny Prigozhin. Putin spokesman Dmitry Peskov says those reports are a lie. U.S. officials believe the plane was down by an intentional explosion and say Prigozhin was the likely target. They say it follows a common pattern with Putin to silence his critics. Prigozhin tried to overtake the Kremlin's military operation back in June. The list of people missing in this month's wildfire disaster on Maui has dropped dramatically. Bloomberg's Nathan Hager has more.
Officials in Maui County have released a list of 388 people still unaccounted for. That's after the FBI vetted the tally. Another 1,732 people who had been reported missing as of yesterday afternoon are now said to be safe and well. The confirmed death toll from the Lahaina wildfires still stands at 115, with just 5% of the burn zone still left to search. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Jess and Carol.
All right, Nance, thank you so much. Carol Master along with Jess Matt and Jess in for Tim Stenovec on this Friday. Hey, we want to just bring one of the most read stories out in the Bloomberg. Put pickleball in a headline, and yet you're going to get it read.
Everybody loves it. It's all the rage right now.
Do they really?
I have not partaken in this yet.
I don't know that I love it because I haven't played it. You haven't played it, right?
I haven't. I feel like I'm starting to get a little FOMO, though, because everybody talks about it all the time.
I don't know. So Nicolas Maduro cracking down on the Venezuelan elite's growing obsession with paddle tennis, blocking the construction of courts as the sport's disorderly proliferation begins threatening the capital's green spaces.
Yeah, and officials from the government's so-called eco-socialism ministry recently taped off the perimeter of a club seeking to break ground in eastern Caracas after neighbors protested against construction in a long-established wooded area there. And so now over 100 courts are in the capital from less than 30 a year ago.
That's
so 100
right?
from 30.
So it's interesting. The president of Venezuela, he went on television, state television last week. He said there are a lot of places you could build paddle courts in Venezuela. They shouldn't be destroying green common areas of a community. He talked about, all right, we get it, basically that there's a lot of appeal, but he added that concerned residents could count on his government's full support. So, yeah, top of mind for Mr. Maduro.
It's interesting because when you look at this, there's a line in there talking about how pickleball, which is threatening the dominance of tennis in the U.S., is it?
I don't know.
We do have the U.S. Open coming up.
I don't know. Talk
soon.
to Jason Kelly over at our Bloomberg Originals team and did a whole big thing episode on pickleball. Talked to my brother Bill. They're all over it.
I'll have to ask
people
Paul
love it.
Sweeney of Bloomberg whether or not he's into this because I know how much he loves tennis.
Yeah. A recent study by Deloitte anticipates it will become a global